Hello everyone. I hope all of you are doing well. In this session, we are going to discuss about variances. And you might say we need to discuss or we need to study standard costing, right? So before moving ahead, first we need to understand that what is the meaning of variance. Variance means a comparison between what? Comparison between actual and standard, or you might say planned outcome. Right. So let's understand through one example what is the meaning of variance. So if I say that we need to manufacture 10 cars and we estimated that for manufacturing these 10 cars we need to incur an expense of 70 lakhs, right? But in actual, when we manufacture 10 cars, we came to know that we have incurred an expense of 80 lakhs, which is more than what we have planned. So the difference of this 10 lakhs, difference of 10 lakhs between actual and standard, or you can say planned, is known as variance, right? I hope now it is clear to all of you that what is the variance. Variance is basically a comparison between actual, that what is actually has happened, and what we were planning. If there is any difference between actual and planned, this is known by the name variance, right? So variance is basically of two types. First one is favorable variance, and second one is adverse variance. When I say favorable variance, it means the difference between standard and actual is beneficial to entity. When I say beneficial, what does it means? For example, you have estimated, I am continuing with the same example which I took above, that you have to prepare or you have to manufacture 10 cars and you have estimated that you need to incur an expense of 70 lakhs, right? But in actual, when you manufactured 10 cars, the actual expenditure which you have incurred is only 65 lakhs. So, can I say the actual expenditure is less than what we have expected or what we have estimated? The answer is yes. We have incurred 5 lakhs less than what we have actually estimated in the inception of the manufacturing, right? So this 5 lakh is difference between estimated and planned. So this is variance. But this variance is beneficial to the entity or not beneficial to the entity? Can I say it is beneficial because we are estimating more cost, but we have completed 10 cars in less cost? So when I say it is beneficial to the entity, I can say it is a favorable variance, right? So when the difference between standard and actual is beneficial to the entity, it is known as favorable variance. And favorable variance is denoted by the letter F, right? So if I have to write the favorable variance, this 5 lakhs, I can write it just like 5 lakhs and in bracket I have to write F to denote it as a favorable variance. I hope it is clear to all of you that what is the meaning of favorable variance. Now let's move to adverse variance. When I say adverse variance, it means when the difference between standard and actual is not beneficial to the entity. I am making a slight change in the same example. For example, you have to manufacture 10 cars. You have estimated that you are going to incur 70 lakhs as the manufacturing cost. But in actual, for 10 cars, you have incurred 80 lakhs, right? So there is a difference, or I can say variance, in this situation, and the variance is of 10 lakhs. Because the difference between the planned or standard and the actual is of 10 lakh rupees. But now tell me whether this difference of 10 lakh is beneficial to the entity. The answer is no. This 10 difference of 10 lakh is not beneficial because we have estimated that we can manufacture 10 cars in 70 lakhs, but actually we are incurring 80 lakhs for manufacturing 10 cars. So this is an adverse variance. And this adverse variance is denoted by an alphabet A in bracket, right? So if I have to write 10 lakhs adverse variance, how should I write? It will be written like this, right? So now we are calculating the variances, but what is the need or why we need to calculate the variance? Variance is basically calculated to check whether the things are going as we have planned or there is some differences between the actual performance and what we have planned. And if there is a difference, if there is any difference, there is any difference between what we have planned and what actually has happened. We can find out the reasons, that what are the reasons behind the difference, right? So that we can take corrective actions, right? If I talk about this example, that we have planned that to manufacture 10 cars, we have estimated that we are going to incur 70 lakhs, right? But in actual, we have incurred 80 lakhs. So we came to know that there is a difference between plan and actual of 10 lakh rupees, right? This 10 lakhs is actually loss or actually cost for the company or to the manufacturer. Then the manufacturer need to find out that what are the reason behind this excess cost of 10 lakhs, and then the manufacturer can take the corrective actions to reduce this excess cost of 10 lakhs, right? And he can reduce its total cost as to its cost what he has estimated in the beginning, right? So this is what for which we are calculating the variances. I hope it is clear to all of you till now. Now we have to understand that for what things we need to calculate the variances. In this chapter, we need to calculate the variances of direct material. Second thing which we need to understand under variances is variances of labor. Direct material variance and labor variance. Third thing is overhead variance. And fourth is sales variance, right? So we need to cover these four type of variances in this chapter. So let's begin with the first one, that is direct material variances. So before directly moving to the direct material variance, first we need to understand that how the material cost is calculated, right? Can I say that if we know that what is the quantity of the material, that is material quantity, and if we know the material price per unit, then we can easily find out the material cost. For example, if I say we need 10 kg or 10 liter of milk to produce 3 kg of butter, right? So we know the material quantity which we need to produce 3 kg of butter. And if I say that cost of 1 liter milk is rupees 100, right? So can I find out the material cost to prepare 3 kg of butter? The answer is yes. It is very simple. What we need to do, we need 10 liter of milk, and the cost of 1 liter of milk is 100 rupees. So the cost of 10 liter of milk which we require to prepare 3 kg of butter is 1000 rupees. So 1000 rupees is the material cost. So this is how material cost is calculated. Now, when we say material quantity, we can bifurcate it into two types. First one is standard quantity, and second one is actual quantity, right? Similarly, price can be divided into two parts. First one is standard price, and second one is actual price. So when I say standard quantity, it means an estimated quantity for the desired outcome, right? For example, that we have planned require to we require 3 kg of butter, and we have estimated that we require 10 liters of milk to prepare 3 kg of butter, right? So this is an estimated quantity for desired outcome. In this desired outcome is 3 kg of butter, and estimated quantity is 10 liters of milk, right? Means it is a planned quantity for the outcome which we require, right? Actual quantity is the quantity of material which we have actually used for the desired outcome, right? So for example, we have planned that 10 liters of milk is required for 3 kg butter, but in actual we have used 12 liters of milk to make 3 kg of butter. 3 kg of butter is the desired outcome, which is common in both the cases, but the quantity is different. Quantity of material which we have expected or estimated is 10 liters, but what we have actually used is 12 liters. So this 12 liters is the actual quantity, right? Same is the case with price. For example, if I say standard price, Standard price means the estimated price for the material. Estimated price. For example, if I say we had made an estimate that we can get a milk for rupees 90 per liter, right? So this is something what we have estimated. But when we actually went into the market, we came to know that the actual price or the price at which we have actually bought the milk, actual price at which material is purchased is known as actual price. For example, we have purchased the milk for rupees 100 per liter, then it is an actual price. So I hope it is clear to all of you that material cost is calculated by multiplying quantity and price. There can be two types of material quantity, one which is planned and one which is actual. And price can be divided in two parts. First one is standard price and second one is actual price. Now let's move to the material variances. There are five types of material variance, right? What are the five types of material variance? First one is direct material cost variance. Second one is direct material usage variance. Third one is direct material price variance. Fourth one is direct material yield variance. And the last one is direct material mix variance. Now we will discuss each type of variance one by one. So let's move to the first one, that is direct material cost variance. This variance will arise when total standard cost or I can say total planned cost and total actual cost is different, right? So when the total variance cost will arise, total material variance will arise when the total estimated cost, or I can say total standard cost, and total actual cost is different. Means there is a difference between total planned cost and total actual cost. If we know that how to calculate total standard cost and total actual cost, then we can easily calculate this variance. So first let's understand how to calculate total standard cost. To calculate total standard cost, what we need, first thing we need is standard price, right? Second thing, to calculate the cost, what we need quantity. Second thing, we need standard quantity. Standard quantity for actual output. Right? If we know both the things, that is standard quantity and standard price, then we can easily find out total standard cost by multiplying these two. Because for calculating cost, we need two things. First one is price and second one is quantity, which I told you here. That's how the material cost is calculated. We need material quantity and material price. If we have material quantity and material price, we can calculate material cost, right? So if we need to find out standard material cost, means the planned material cost, we need the planned material quantity, that is standard quantity of the material. And second thing which we need is standard price, that is estimated price for quantity, right? Let's understand this one through one example. For example, you have to manufacture 1000 shirts, right? This is an actual output, right? You have planned that for manufacturing one shirt, you need 3 meters of cloth, right? And the estimated price for 1 meter cloth is 100 rupees, rupees 100 per meter. Now, can we easily find out the total standard cost because we know the actual output, that is 1000 shirts? We know the estimated quantity or the standard quantity for one shirt, that is 3 meters, and we know the standard price, that is 100 rupees per meter. So can I say total standard quantity for actual output will be 1000, because we have to prepare 1000 shirts into 3 meter, right? Therefore we require 3000 meters of cloth, to prepare 1000 shirts? Can I say this is an estimated quantity of the cloth which we require? Or I can say it is an standard quantity of cloth, right? Second thing which we need to find out the standard cost is standard price, which we already have. Standard price is also available, that is rupees 100 per meter. So what is the total standard cost? Can I say the total standard cost for 1000 shirt will be 3000 into 100, that is rupees 3 lakhs, right? So this is how we have to calculate standard cost. Second thing which we need to calculate is the actual cost. For actual cost, we also need two things. First one is actual price, means the price at which we have purchased the raw material, into actual quantity which we have used for the production of goods, right? So if I continue with the same example, that is we need to prepare 1000 shirts, and we came to know that we have used 3100 meters of cloth to prepare 1000 shirts, and the price at which we have purchased the cloth from the market is rupees 110 per meter. Can we easily find out the actual cost? We used 3100 meters of cloth, and at price what we have purchased is 110 rupees. So can I say total actual price is 3 lakh and 41,000, which we have actually incurred in manufacturing 1000 shirts. So if we need to find out direct material cost variance, we need to see the difference between total standard cost minus total actual cost. If we see in this example, total standard cost is rupees 3 lakhs and total actual cost is rupees 3 lakhs 41,000. Can I say that there is an adverse variance of 41,000, right? Because we have to incur an expense of 3 lakhs to manufacture 1000 shirts, but actually we have incurred 3 lakh and 41,000 to manufacture 1000 shirts. This difference of 41,000 is the variance, and this variance will be named as direct material cost variance, right?